Okay everyone, welcome back to Apex Trades. We're on a mission to turn $500 into $5,000, and today is going to be our first trade. We've been doing some reviews, some understanding of where we think we are with the charts, where we think the potential key levels are, where the volume is, and I'm going to kind of go over all of that. I'm also going to show you bookmap and what I'm looking at in terms of where the key volume is and the liquidity. And then I'm also going to go over kind of leverage levels, what I'm looking at in terms of trading, what size, potential stop losses and things like that. So yeah, if you're new to the channel, please sit back and enjoy. Feel free to comment, all that kind of stuff. And yeah, let's get going. So let's start with some key levels. Kind of always has to feel natural. And this is very subjective. There's some wrong ways to do it, but certainly it's very much down to your opinion. This kind of feels like a good spot. I think we'll go on up the top. I think this feels like a good spot. And this is a nice little trading channel. I think just for good measure, no, I'll tell you what, we won't overcomplicate it at this stage. Once you kind of find your key levels, at least, I mean, we could maybe carry on doing these, maybe put one somewhere around here. We could start doing some horizontals, sideways channels. But for now, just because I want to get this video out, I think it's probably fair to just keep it kind of simple for now. What indicators do I want to use? Firstly, we want to see volume. So let's go to here. Let's have the volume. And we can see straight away, at least this is the 4 hour. You can see we've got some good volume, at least in the last couple of days. Mainly the news, although this was during the Asia session where we had this big pump. And then obviously we had the big dump that followed soon later. For me, I only use a few indicators, and this will always form part of my setup and system. Firstly, I kind of always like to see, in general, where we are with the exponential moving averages. As a kind of note, if we go on the daily, market structure is always key. So you want to know, are we bullish or are we bearish? Well, the way to find that out is simply, are you below? Is your price action below the 200-day moving average, which is the average price over the last 200 days or the last 200 candles? And if you're above that line, well, you're considered bullish. So yeah, I mean, we could probably suggest we've been bearish since April, and really it's been going down ever since. Now obviously, as price starts to consolidate, it allows the 200-day moving average to catch up. But I mean, yeah, it's always good to understand where you are with market structure. I mean, it's quite obvious at the moment. It's not like you need a degree in economics to understand that we're in a bear market, but just as a kind of snapshot to understand, market structure. Are we going down or are we going up? Are we going sideways? Are we consolidating? These all help you understand how to play, or what to be looking for in terms of entry and exit. I always like to have the 21-day moving average, the thick line, because I want to see when we start to diverge between the shorter time frames and the higher time frames, because the moment the thick line starts to cross the 55-day moving average, it is on the EMA here, we go into a long position, or we are considered not long term, but at least short term, depending on what time frame we're looking at, that you're in a change of direction or change of momentum. Back to the 4 hour. Yeah, you mean right now you can see we've just, in the last 2 candles, just started to turn long. Now this particular EMA ribbon gives you signals, and the signal is essentially when it changes, or when the 21-day moving average passes over the 55-day moving average, it's considered okay. Now we expect to see longs, and the 4 hours quite. It's not like well, this has been. It's just literally changed now. What are we on? The 29th of September, and the last change in momentum was the 15th. So it's good. It's a good week, couple of weeks actually. And even before that, when it did go long, it was actually 9th of September and changed on the 15th. So that was more like a week, and then we've gone back into 2 weeks. So yeah, just to keep insight into what's happening, at least at different time frames. Okay, so right now we still haven't determined where are we going to enter and where are we going to exit. Okay, that's where we bring in our next indicators. And these indicators, by the way, these are all lagging indicators. They are perceived on previous data, not look ahead. So you've always got to take these with a pinch of salt and only use them just to gauge potentially where price may go, not definitely go. And using a combination of these different indicators with the actual liquidity in Bookmap, which we'll go over, a bit later on. That's what you really want to understand. So, moving averages, I'm going to take them off the screen. I just wanted to kind of get a sense on where they are, but you can see. I'll just very quickly, if I zoom into this area, we are getting really tight here. What that normally means is explosive moves, potentially to the upside. So, and the reason I think that is because whenever you get low volume, what always comes after that is high volume. So, we at some point soon, that's probably going to turn green, and maybe the next couple of candles. So yeah, maybe tomorrow, maybe even tonight. Let's go into the 1 hour. And you can clearly see we've already changed on the 1 hour. We do see this frequently change between the two anyway. More frequent are the changes on lower time frames for obvious reasons. Specifically when it's consolidating as well, you're going to expect to see up and down movements, and the moving averages catching up to the price action much quicker than you would do on the longer time frame. So the further out you get, the easier it kind of gets to determine potentially when things are going to change. Okay, so I'm going to just shift this off for the second. We want to know, just move this up a little bit. I want to know what's going on with the money flow index. What is the money flow index and why is it important? The money flow index is a calculation of both price and volume. So it's like a weighted average of the two together. So if a lot of volume starts to come in and affects price, what you'll start to see, whether it's to the upside or the downside, is the volume line and the price line hit what would be perceived as overbought if it's above 80, and oversold if it's below 20. And whether this is mass psychology or, which is to say enough people believing in it, then they will naturally start to change the direction. I don't really know, but ultimately what you tend to see, majority of the time anyway, is when it hits its peak, it reverses the direction of the momentum. So, you can kind of see there's a couple of things just to be mindful of. Just let me just give you a couple of examples. Right now, when you're looking at this, where we've hit the peak here, we've blasted through the peak, and then we've we've maintained, above it, which is why, in parallel with the kind of peak, the lower peak here, we've continued to the upside. Really, what you normally see is a massive spike down. Once it hits the peak, and typically it'll hit the exact 80 point and then start to retrace back down. But if it really overshoots, that tends to mean continuation to the upside, and as a false signal from this oscillating indicator as well. So don't just take it at the fact that it's hit its peak and then you expect a downside. I'll try and see if we can find something where in its typical format. Let's see. That's a classic one. So in this one, yeah, okay, it's hit a peak here. It's slightly over. It's gone slightly over. It's 80, and then it's come back down. You can see, it's been respected with the downward candle. However, it hasn't broken down any key levels, which would have been this 18, around the 18,500 mark. So it kind of stayed in the upper territory of the MFI before actually finally hitting a peak right at the 80, which is for me the best sign. If it hits that 80 and gets rejected, then you see a good sell-off. If it overhits, I tend to wait before I start to think about whether I'm going short or bottom, whether it's going to go long. I mean, see, again, we went past the 20 and it didn't exactly have an explosive move to the upside. Far from it, actually. It kind of just overshot, consolidated for this period of time, and then when it came back into the 80, that's when we saw that nice move to the upside, and then followed by obviously your price action as well. So it's not perfect, but it's a good indicator that at some point soon the price action will change. And I think the further you get out, as in the time frames, more often than not, you tend to see better areas. Now, obviously, this is the peak. It's not necessarily to say it's got to hit it every time. So you've got to think, well, as a trader, as it's approaching, so you're seeing that, from this point, it's starting to slowly creep up and up and up. So you're expecting at some point, specifically while the volume's low, this is the key thing, so the volume's been really, really low, but at the same time, the money flow index has increased because essentially the price action has stayed pretty static, or maybe even increased slightly, because obviously we've seen momentum to the upside with the volume. Obviously the volume starting to increase here, which is why we're seeing further increase in the size of the MFI. So you are seeing this, and then at some point you do get your explosive move, because what always follows low periods of volatility is high periods of volatility, and then we've seen it here. So you'd be probably thinking to yourself at this stage, you're readying yourself for a potential move, and there's the classic kind of doji candle where and this is a 4 hour, by the way, as well. So in 4 hours, you've had massive move to the upside, massive rejection back down, and then it's finished just at this point. That's another good indicator, paralleled with the fact that you've had, this long few days of low volatility before eventually hitting your downside move. So you'd potentially looking at that candle and saying, okay, well, clearly we've had big price rejection, from, let's see, that's low point 19,708 all the way up to 20,108, so nearly a 1,000 point move. So that for me is a really good signal and indicator that, okay, we've struggled to really push the price upwards. So at some point soon, we're going to go to the downside. So the money flow index is like an RSI, but I think because it includes volume, it's a much better indicator than just the RSI, because the RSI, again, which is an oscillator, as in it moves up and down, is really just looking at price action alone. So I always, my go-to is always the MFI, just from a TA perspective. Obviously, we can't just use TA, because we've seen what happens when we get news from the Fed, FOMC meeting, CPI data, all that kind of stuff really affects the market. So you can't just rely on TA alone. Otherwise, you'll be on the deck pretty quick. So what's this telling me now? So right, 4 hour, right? Looking where we are in terms of the momentum. So we've seen what happens in the past. For me, it's got room to move up higher, which normally coincides with higher price movement, at least on the 4 hour. If we go to the 1 hour, similar story. Got further upside potential. I mean, we've already hit a relatively low entry here, so we've got further upside to go for sure. So now I'm thinking, okay, well, where would I put my entry to short? Because I'm not going to long. I mean, look, when we're smack bang in the middle of this MFI, there's an absolute risk that it can go either that way or that way, you know, up or down. So there's no way you'd be trading in this zone. Absolutely not. This is where all the consolidation is. You know, there's investors in the market not really know which side, you know, or which way the price will go. So you don't want to. For me, it's suicidal. You're gambling really if you're going to put any kind of entry level. Really, you're looking potentially, you know, these levels or these levels if you want a long. And you know, from personal preference in a bear market, or if we're below the 200 EMA, I'm relatively well. I'm not going to long in those scenarios. I'm really only looking for shorts. And if it was above the 200 EMA, I'm really only looking for longs. That's my conviction on how I think about it. So, you know, even if it got down to I wouldn't be thinking about a long. I'd probably be thinking, because we're still in a bear market, if we break this, then there's the capitulation potential. You know, even as low as the 17, somewhere around here is, I think, your local bottom, and then, you know, beyond that is good night Vienna. Okay, so that's the MFI. We're now gonna add the squeeze momentum indicator, which is almost like a grown-up version of the MACD. I say grown-up version. It's what I like to use because for me it adds a bit of clarity into what's going on. So here's the thing, right? So when the light green candles are in this kind of lighter period versus the darker periods, it essentially means volume and momentum is with the bulls, so to speak. You know, you can clearly see it almost gets validated with the uptick in the MFI as well as the uptick in price action. The moment you start to see the darker colour, what that potentially represents, and it's not always, but what it starts to represent is over exhaustion. You see over exhaustion here. Obviously now we're starting to turn and lose momentum on the bull side, and as we start to dip down, we can see we're a bit choppy, bit downward, and then we eventually turn into the flat line and then into the light red, which is then essentially the bearish momentum is starting to take over. Same on. So it's this oscillation of bulls, bears, bearish exhaustion, bulls, bullish exhaustion, you know, so on and so forth. So using these two indicators is a way to give me good bias towards what's going on. I mean, really, if you're getting these signals aligning, i.e., you know, we're coming to the end of the bearish momentum here, and then we turn dark red, then potentially I know, okay, well now we're going to start to see potentially some long action because we'll lose momentum on the squeeze momentum, and we're starting to see a rise in the MFI. And obviously, you know, it's easy to look, you know, in hindsight, but you can see that you know turned out to be a good move. Yeah, so these are the kind of things I'm looking for. Now, this is all good for kind of reviewing past data, and the next one I'm going to do is probably no different. But I'm now starting to refine what I'm doing, so I can kind of sense we're going to start to continue to the upside. What would tell us that? Well, number one, we've run out. Can't get my words out. We've run out of steam, effectively, because we're now in the dark grey territory. We know this at some point will probably turn green and go to the bullish sentiment. And then we know we're also starting to come up high on the MFI. So I can probably predict we're going to continue to the upside. The question is, at one point do we think we'll come to the downside, and maybe how high will we reach? Well, we can use Fibonacci retracement tool for that. And with the Fibonacci retracement tool, what you're really looking at is your local swing high, which would be, well, it'd be that candle there. That's the highest point, to the lowest point that follows that, which is here. And what we're looking for is the sweet spot. Now, I've coloured mine specifically to get rid of the noise, because normally the colours you'll see are all different colours, and I'm not. I just want to focus on the zone of, or the golden pocket area, basically, where majority of traders, when they're outside of this area, always try to get back to. So, if they're below it, they go long towards it. If they're above it, they go towards it. Almost think of it as like the VWAP, the volume weighted average price, and I'll talk about that in a second when we look at bookmap. Okay, so let's. So what I've done is I've just literally clicked on the top of that candle to the bottom of the low. I'm just trying to get it precise. There we go. So you can see how well this is respected. So we came down, we had the big sell-off, and we hit the local bottom. Now, you can't predict where the local bottom is going to be because you've got nothing to go off, but what we can look at is what's the retracement look like, where are we potentially going to go back to, and what you have is what's called the golden pocket, right, which is the 0.5, so 50%, and just shy of 50%. I think it's like, oh, sorry, let me just move that back. There's an error on my behalf, I do believe. Yeah, I'll just delete that. Try again. The golden pocket is just around this area here. And this is where, on the retracement, all the traders love to get back to, and sometimes they'll overshoot it by the effing sake. Sometimes I'm not a fan of this, but anyway, let's try it again. Boom, there we go. So we can get rid of this. What tends to happen sometimes, though, is this is all considered, a good area to get to, whether you're way outside it or way above it. Fibonacci, I'm not going to talk too much about it, but it's the golden ratio. Everything is in nature to kind of conform to these ratios, and it's no different in trading. So what have we looked at so far? We've looked at the money flow index, and we've looked at the squeeze momentum, and now we've looked at potentially where the price is going to get back to. Now I don't want to go in back at the golden pocket area in terms of putting a short, and I think for me personally it's got more to go, which would be looking more like, I'm looking, well, where looks like a good entry. Now we're going to talk a little bit about risk management and everything else in a second, about being confident where we put our short position, but I think this looks like a good spot somewhere around here. And the reason I think that it looks like a good spot is because, well, we've had, if I break this down to the 15 minutes, let's just say, oh, that doesn't look great when on the screen. Apologies, let me see if I can bring this over there. I think we've got more data to the side. Let's see. Yeah. So we hit a peak here. We've got also that same congestion here and here. So for me, I'm going to put my short here. It feels like a good spot. I'm going to back this up in a second with bookmap because I want to review that. However, somewhere around this area here feels like the potential. So I'm predicting that we've got more to run on the MFI, on the hour rather. We've got more to run on the MFI. We've got some good potential points of interest all along here, right the way back here. So it kind of feels like that could be an area where we'd probably run out of exhaustion at this point. We may pick the peak, and then hopefully we start to see some downward action as well. Obviously, we're just starting to come into bullish momentum once we change on the oscillator here, on the squeeze momentum. So it's going to be interesting, but that feels like somewhere around there. So let's see what I'd probably do. I could maybe go right at the top. What would that look like? No, I can probably stomach a little bit more. Let's go here, right? 18,886. So let's put that in. Right, we'll lock that in for now. 18,886. Let's put that in for now. Right. Let's name it. Short entry. Red, okay. Coordinates. So 18,886. All right. So then what would we want to look at in terms of a take profit? Well, given that we'd probably want to come back down and test the 0.5. Yeah. I mean, potentially we'd probably want to just come down to where the golden pocket is, but we've already peaked it on this side. So it may not be respected as much as we'd expect. So I just don't want to be too greedy, but I think based on the volume, we're expecting some big action coming. So I'm going to set my take profit at 19,420. Yeah. All right. So let's go with that. 19,420. Let's put it here for now. Let's call that TP. 19,420. Style. Green. And this is all going to be pretty interesting in a minute when we go over to bookmap. Okay, coordinates text. Make that green. And this will be my take profit. Okay. Here we go. So we're hoping we get continuation to the upside. We hit here. I don't mind if it goes a little bit higher. We can stomach that. You've got to feel comfortable being in the red as a trader. Fact of life. Just making sure you're managing your stop loss. But what I would probably say is I'd probably be wanting a tight stop loss, right? So if we're coming up to the 19,886 for our short entry, I'm going to use just above our golden zone. I'm going to call that the 2,000 bang on, right? So let's do that. Stop loss will be here. Stop loss, okay. Like that. I don't know, yeah. Red. Style, green, that red. Okay, We'll figure out what our liquidation point is later, but it doesn't really matter because we'll be stopped out. Okay, so nice, looks like about 13%, but this is about 45%, I think, maybe, in terms of your ratio. So it would be a nice win. We're trading with $500. The plan is to get to $5,000. You take your wins, you take your losses, but as long as our wins are bigger than our losses, we're okay. Okay, so that's just basic TA. That's just give me some potential prediction about what may happen based on what we've just seen. Let us now go into Bookmap and let's see what goes on. So right here we've got the VWAP. This is the volume weighted average price. Now typically when we're above this, traders want to sell because they get value, and when they are below it, traders, institutional traders, not retail, institutional traders use this as good buying areas because that it's value. So the VWAP, or the volume weighted average price, is to say what the real price based on all of the purchases of Bitcoin is now, or what where the value is basically. So right now it's above value, so there's an expectancy that it will come down. But ultimately, what you're always seeing is that this VWAP line, when it's above the when the actual price action is above the line, is continuing to rise anyway. So eventually it may come back down. If the VWAP is here, it may bounce off it, and it's being massively respected at the moment. You can see, a touch it here, bang, straight back up again. So what are we looking at here? Well, these delta bubbles are purely market orders. These are where you're happy to take the ask price. Doesn't matter what the spread is. You're just going to buy at whatever that is. If you're looking at the red section here, these are all limit orders. So right now, at 19,600, got 700 Bitcoin currently waiting to be filled. Now, oftentimes, that might be a detractor for a trader. You're starting to see this price action move up. Is it going to go and get that liquidity, fill it, and then move to the upside? Or are people going to approach it and think there's not enough buying power to get past this level, therefore we're now going to change momentum and start to move down? So what I'm looking for when I'm looking at this, I'm looking at key liquidity zones. Where is the liquidity? So we know we've got a limit order, set at, I think it was 19,886. It just felt like a natural position. So that's somewhere around here. So in order for us to get filled, it's got to take a number of these areas out. Now what will happen? I mean, look at the previous. These are unfulfilled orders where there've been massive amounts of liquidity in these areas, but over the past, what's that? This is UK time, so nearly 10 o'clock. We've, this has not been touched, but them orders haven't moved. They're still in there. What you may see now is it will try to get that liquidity and potentially come back down to the VWAP, maybe consolidate for a bit and then bounce back up to try and get this liquidity here again. Now, this might not just be liquidity from limit orders, but actually stop losses and liquidation points as well. So price is always looking to find where the liquidity is. So whilst it's good to just have your TA with TradingView, you can't take your eye off where that liquidity is, because if we're approaching this and I'm noticing that, let's say, the liquidity starts to be pulled, then theoretically it could go a lot higher, and then I'm going to want to take my order out, because I potentially it's got the power to continue to the upside, and I don't want to get filled here when theoretically it could go even higher. So even though I'm doing this kind of trading journal, there may be changes to how I do it, because I'm going to be reviewing where I am. That's if I'm about. If you know, I'm not going to have my eyes glued to the screen. If it comes to the point where it hits my order, I get stopped out, well then it gets stopped out. I'm not overly bothered. You know, the point is I've done some sort of analysis which you think has got a good chance, and then I'm, you know, if I'm about and I can see what's going on with the zones here for the liquidity. I mean, look at this. We've got 847 Bitcoin ready to be bought for sellers to sell. Now that can sometimes, you know, get rejected. Sometimes it can't. It just depends on how much buying power we see then. And sometimes the manipulation element, which is the most annoying part, is, you know, we could have, you know, a big institutional single investor who may put millions, you know, millions of dollars worth of a sell order for Bitcoin here. But in order for him to get there, what he's trying to do is get the kidology to make the market think there's, you know, continuous uptrend. And so what they'll do is they'll keep putting, even though they've got a massive sell order here, they'll keep putting buy orders in to keep the momentum going. All the time, every time they've put a buy order in here, the price has gone on to continue. They've made money here. They put another buy order in somewhere around here. They've made money again. They then start to sell off their orders, knowing that they've got a huge sell order here. And the moment that gets triggered, they've made money on the way up, and then they've made a huge money on the swing back down low, because this has been where it's been rejected. So what I'm hoping is this is the real solid line of liquidity, and potentially what it does is it comes up to get that liquidity, peaks up to where we are, which is just about here, hits it, and then we start to see that rejection, and that'll be a lovely move for us on our journey from $500 to 5K. So what I'm going to do now is just finish this on KuCoin. Just bring this up. Hopefully you can see it. It'll take a second. I just have to refresh this a quick second. It's loading up. Come on. I think the processing power of my PC is absolutely on its back. Okay. So what did we say our entry point was? It was 18,886. Yeah. So here's what we're going to do. I want a limit order and one for the full amount. I want to be a sell. So input price is 19,886. I want to be 100%, and I want to trade on a 20x leverage. Yeah. I want to set my take profit at, let me just skip this. So you can see my $500 balance here. What was our take profit? Now let me just go back and check that out. So our short entry is 18,886, and our take profit is 19,420. Okay, 18,886, 19,420. 18,886. 18420, 188. Oh, sorry, 19. All right. Oh no, that's my bad. It's not that, is it? That's the actual entry price. What am I doing here? Well, amateur. 20,000, wasn't it? Let me go ahead and check that because I want to make sure. Yeah, it was 20,000. That's what we're going to set our stop loss to. Right. So, recap. Entry price, limit order, 19,886. It's 20% leverage, which turns our $500 to 9,644. We want a take profit of 19,420, which is about a 47% profit, which would be nice. So on a $500 account, that would take us to maybe 750 nearly. That would be lovely. Stop loss of 20k, which would be a 13% loss. Should we lose, we want to sell that as a short. Confirm your order. All looks good. Let's see if we can get our estimated liquidity. It's going a bit slow. Let's put it in. Now what we'll see in open orders when it comes in a sec. Never try and produce on a laptop, it is terrible. But I am getting that MacBook Pro soon, and that'll be a big difference. Well, anyway, my order will go in there in the open orders once it syncs. It seems I'm having some connectivity issues. But I guess you get the picture of where things are. So, yeah, just to recap, we've reviewed some basic levels for support and resistance. We've reviewed the type of momentum indicators and oscillators that I like to use, including the EMA, just to kind of figure out where things are. We then looked at potentially where the Fibonacci retracement can go to in terms of getting back to that golden area. We then looked at Bookmap to look at where the key areas of volume are to confirm our bias towards where we think it's going to go. And then we've executed a plan and a trade on what we think it's going to be. So that's our first trade, which we hope to get filled. If not, no problem. We look for the next setup. But for now, I think that's pretty much all I wanted to talk about today. And then I will see you guys in the next one.